Hello, my name is Richard Sudek, and I'm the Executive Director of Beal Applied Innovation at UC Irvine and Chief Innovation Officer. And first of all, I'd like to thank UPS for sponsoring this speaker series. UPS has been a strong supporter of Beal Applied Innovation and entrepreneurial ecosystems in Orange County and really across the country. Also, I'd like to remind you that when we get to the question phase, the Q&A phase, if you would please put your questions in the Q&A box rather than the chat box. And Matt Hansen today will help coordinate the questions. So I'm very excited to have Fred Royall as our guest today. Fred is Business Development Executive in Commercial Banking at JPMorgan Chase with a national focus on diverse businesses. He identifies new opportunities and builds upon existing relationships with women and minority-owned businesses. In addition to driving new business, Fred also focuses on developing an integrated diversity strategy that aligns with global supplier diversity, advancing Black pathways and women on the move. Fred has over 20 years of capital marketing experience. Most recently, he was the CEO and founder of Royal Capital Holdings, LLC, a boutique investment bank that raises capital for private, diverse middle market companies. He earned his undergraduate degree from Syracuse University and has an MBA from Columbia Business School. He is a frequent speaker and panelist on topics that address the ability of diverse businesses to gain access to capital. So, Fred, welcome to Making Waves.
Thank you for having me, Richard.
Glad you could make it today. So let's start out with your background, sort of the beginning, a little bit about your family, where you grew up, and sort of where you went from there.
Sure. I grew up in Rockville, Maryland, which is about a half an hour outside of Washington, D.C. Spent most of my formative years there. Then we moved down to Miami, Florida, spent a couple years there, moved to Houston, Texas, and then moved back to Rockville. So in essence, did a triangle. But by and large, spent most of my formative years in the metropolitan DC area.
Great. So you went to Syracuse. So tell us a little bit about, as you try to transition from college into your first job, what was that like? And tell us a little bit about the beginning of your career.
Sure. Yeah, happy to do so. So Syracuse University, back then, I can't say it was the strongest feeder into financial services. Very good school. It had a very good communications program. The School of Management was up and coming, but at that point, still there was some work to be done. So there were not a lot of investment banks that came to Syracuse. That being said, there were two in particular, one of which was Merrill Lynch. So they have, I think they interview about 7,000 candidates across the country, and then they ultimately bring 50 back to the final interviews, which are, I think, either the fourth or fifth round. And then out of that group of 50, they select 10. So it's fair to say pretty competitive. And so I went through that process, made it from the group of 7,000 to the group of 50. However, I did not get an offer to join Merrill Lynch coming out of undergrad. And so I asked, I think this is a key thing about the professional journey is even when things don't go your way, it's to ask questions, it's to get feedback. And so the feedback that I got was that I had not, all of my college internships had been at a company called GE, whereas the majority, if not all of these students that were chosen had interned on Wall Street. So understood. So I ended up taking a job at GE. And before starting, I spent that summer in Europe studying the financial services industry, and in particular, how the European Union would change as borders came down and there was an increase in cross-border capital flows. So I wrote a 20-page thesis. And then I took that thesis, this is before the internet, and went to a magazine that had a lot of the top financial services firms represented, one of which being Merrill Lynch. And I went back to the same recruiter that I had met with and got the feedback and said, here I am, I'm back. And, here's the additional knowledge that I've gained about the financial services business. I would love to be put up for consideration again. And it worked out. So that started my journey on Wall Street. So out of 7,000 candidates, they ultimately chose 10, and I was one of those 10. And, Richard, that was probably the first story that to me really crystallized the importance of perseverance, of not giving up, of if you really want something, do all that you can to achieve your goals. And that has stuck with me throughout my entire career.
So I think that's so important, especially for our younger listeners, the students maybe, or people young in their career, that I don't know anyone who's been successful that hasn't had failure along the way.
Mm-hmm.
And so this is just a great example of, some could have been discouraged and not gone back, but you effectively just tried harder and you finally got there. And I think that's really an important message to everyone, but certainly to younger people in their career. So tell us a little more about Merrill Lynch, once you got there.
Sure. Yeah. And so, for me, it was an incredible investment bank to begin my career. I mean, this is, at the time, Merrill Lynch, which has now become Bank of America Merrill Lynch, was probably the top underwriter of capital, both equities and bonds, in not just the US, but globally. And I had a great seat, a great job working on the equity capital markets desk, where our job was to take companies public. And so in any given year, we would take 300 companies public. And so for me, it was a bird's eye seat to hear from entrepreneurs about how they've built successful businesses, what the drive that was required, how they approached the market, how did they assemble the right management team, how did they create the strategy. So just a great environment to learn. Also in that same environment was, for me, fascinating watching that out of the 300 companies that would be taken public in any given year, the lack of diversity regarding the number of diverse businesses that had access to the capital markets. So in the time that I was there, which was a 3-year period, in any given year, there may be 2 or 3 diverse businesses that out of a group of 300. And so, that was a number of years ago. And it really struck me that it was clear then that there's a lack of access to capital for diverse businesses, and that needed to change. So when I was ready to go back to business school, I wrote my essays. One of my key essays was on the lack of access to capital to diverse businesses. And then I wanted to create an investment bank that would help change that, to democratize the flow of capital into diverse businesses. So fast forward, I attended Columbia, and through that experience, learned a lot that has helped carry me forward in my career.
So I think it's important to talk about, we're going to get to your entrepreneurial journey here
Sure.
in a few minutes, but when you were in college and when you joined Merrill, did you think that you were going to be an entrepreneur, or did you think that the, sort of corporate ladder, corporate path was going to be your path?
I would say, without a doubt, I thought I was going to be a company man.
Okay.
Both my parents, my dad spent the bulk of his career working for Pan Am, which is, a major airline for many decades. My mom spent her entire career at GE, and they retired, 20, 30 years at each respective business. And I thought that would be the same for me.
So I think that's important because, certainly we work with a lot of students who want to be entrepreneurs, but I also have run into plenty of executives or people who, mid-career made a sort of an entrepreneur shift, either by intentionally or unintentionally. We'll get back to that. But so tell me about, okay, so you went to Columbia, you got an MBA. What was next then?
Sure. So after then, I went to go work at a firm called Donaldson, Lufkin and Jenrette, otherwise known as DLJ, which, and this is during the late 90s, was one of the preeminent investment banks at the time. So at the time, Goldman Sachs, Morgan Stanley, and DLJ were probably the top three investment banks. And it was an amazing time to be there. I worked in the private equity group. So I shifted from taking companies public to being in a group that invested in private businesses. What was really neat was being at an institution that was large enough to compete with the biggest investment banks globally, but was small enough such that the CEO would be involved in the execution of deals, and that as a junior person, got to play a pretty neat role on the execution team, initially in private equity and then moving back to my roots in equity capital markets. And again, Richard, I thought that was going to be, the next 20 years. I figured I would go from associate all the way up the ranks to managing director, and then I would retire from DLJ. Well, that didn't happen. In the summer of 2000, DLJ was acquired by Credit Suisse First Boston. So Credit Suisse was a Swiss-based investment bank, great presence internationally. DLJ was primarily a U.S. focused investment bank, so put the two banks together. And so I learned a lot from that experience, and more so around the machine that was this huge investment bank with a ton of infrastructure, a ton of resources, a ton of people. And so culturally speaking, I can't say that was the best combination. And then 9/11 happened. And the markets got cut in half. This is after the dot-com bubble. So there were no companies going public. And we had this bloated cost structure from putting together two investment banks. So much like Wall Street does go through periods of boom and bust, we were in the midst of a bust. And so that meant a lot of headcount reductions. And I think I made it through the seventh round of cuts. And then ultimately I was laid off. So that was the end of that journey.
So it sounds like, that was an interesting part of your journey, and you learned a lot of different things. I mean, in Merle, you learned certain things, but certainly in a smaller firm, still a big firm, but small enough that you got involved in a number of different aspects, which is usually great for someone's career to see the different pieces of how the deal comes together, et cetera. Yep. So tell me a little more about, the type of clients you had, et cetera, when you were at Credit Suisse, deal, I guess. But both companies, they affected it.
Yeah. So they were pretty big companies. Before we used our iPhone for directions, Garmin had technology that we use in cars. So that was a company that we took public. It was probably about $1 billion company. We worked on a company which was a biopharmaceutical company, which was about a $400 million financing off of a $2 billion company, worked in the media sector, again, multi-billion-dollar company. So that was great, in that getting experience across a broad set of companies. Technology back then was also a significant driver of the economy in different businesses. So spent a lot of time in the tech sector as well. So so for me, it was great to get a wide landscape of types of companies to raise capital for.
And during that time, you at some point got connected with Microsoft, right?
So actually that came. So after that was actually when I transitioned from First Boston to a boutique investment bank. And so, that's a really important part of the story, which is, I thought after leaving First Boston that my next job would be back at another bulge bracket investment bank. And the fact was during that time, there were not jobs. And so, I continued to try, but the banks weren't adding headcount because there were no deals to be done. So you didn't need junior team members to execute. So I took in some ways, well, it was a lateral move in terms of title, but it ended up being the best thing for my career in that I went to a much smaller bank, which is called Blaylock and Company. That was a minority-owned investment bank, and this is, this is a part of the story which now I look back, it was such a great learning point but I didn't fully appreciate it. And because I went to a smaller shop, I ended up having a much bigger role at the business, stayed there for about 9 years. And that's really where my entrepreneurial journey started. The big difference between working at a boutique investment bank versus a bulge bracket is, as my former CEO used to say, the phone doesn't ring. You're not getting the incoming call to say, this is $1 billion deal. We want you to lead it. You got to hustle. You have to be entrepreneurial. You have to lever your network. You have to create opportunities. And the individuals that came from bulge bracket banks to then work at the boutique that I worked at, but continued with that same mindset, were not as successful in that environment as they had been in the previous environment, because it's a different skill set. And so for me, I got to finance some of the same clients that I did at First Boston. But the difference was I was leading the origination effort. I was the number 2 person at the bank, leading a lot of the core relationships, one of which was Microsoft. And so got to know the team at Microsoft. And another key lesson that I learned is, while you're developing business relationships, you want to develop personal relationships with your clients. You want to get to know them for who they are. And so in this case, I got to know the head of supplier diversity at Microsoft. They spend $5 billion with, at the time, $3 billion with women in diverse businesses. And one trip at the end, he said, Fred, Microsoft will always support you wherever you go. And with that, I flew back to New York. I took the next week off of work, and I said, I have to figure this out.
So I want to learn more about that, but that part of the story really emphasizes how relationships you build early in your career might be pivotal or incredibly important later. It might not be immediately. I mean, in this case, it was immediately important, but all those relationships tend to come back and help you in different ways throughout your career. So that obviously that relationship was extremely important. So tell us about, you took a week off. So what went through your mind? What did you do during that week?
Sure. Yeah. And so I want to, from the relationship standpoint, I'm so glad that you made reference to that point, because it's such an important takeaway from my career, which is, if you do things the right way, because, like my parents have very I grew up with very solid morals, and you treat people with respect. You do things because it's the right thing to do. My first boss taught me the Wall Street Journal test, which is never do anything that you wouldn't want on the front page of the Wall Street Journal. And because of that, that helped me to develop relationships that have served me my entire career, starting with in this Microsoft is a prime example. But to go deeper into your question, I did an analysis of what this set of relationships look like. So on one hand, I had Microsoft, and then I wrote down a list of other Fortune 500 companies that I had relationships with. And then next, I looked at the diverse CEOs that I had developed relationships with. And then I looked at the private equity funds like Blackstone, like KKR, that I had developed relationships with. And then finally, I looked at the investment community. So BlackRock, Fidelity, the large asset managers. And when I put all that on paper at the nexus, there was a business. And that was the beginning of Royall Capital.
So first of all, I want to go back to one thing you said, because sometimes I think out in Main Street, we don't think of Wall Street with lots of integrity. And it has different perceptions certainly across the country. And so it's good to hear the story about the morals and the upbringing you had set you on a path that benefited in a lot of different ways, even on Wall Street. So tell us about so you looked at your relationships, and tell us about then what was the next step and how you started Royall Capital.
Sure. Yeah. So, at that juncture, and, I think like another key lesson that I learned, and this was the beauty of how I approached it, was I didn't, after that week, say, I'm quitting my job. I'm now going to start a business. I identified what I thought would be 5 key stakeholders that were deep relationships that I thought that there could be business opportunities with. It was Microsoft. Ironically enough, it was JP Morgan, which was one of my biggest clients. It was another large private equity fund. And I thought, if I go into it, and actually, as I was further refining the idea of launching this business, and again, because these were not just now business relationships, they were personal, I was able to speak to them about what I was considering doing. And by bringing them into my thought process and helping me refine the idea, they became committed in some respects in wanting to see me succeed, which is so important. And so through that process, and by the way, that was a year. That was a year-long process of starting with the idea, further refining it, knowing that I was looking a year out. So further cultivating relationships that I knew were going to be helpful to me. Starting to think through how those core relationships could lead to revenue in that first year. And that being a good impetus by which being ready to go ahead and make the shift to start the business. And again, for entrepreneurs, it is such an important thing that you really have to think through the appropriate timing to start a business. And while we all think we have a great idea, ready to move forward, spending more time testing the market, getting feedback, identifying who you think your key clients and constituents are, bringing them into the process. To me, I just found to be incredibly helpful in terms of refining what the business model should be.
So what age were you when you launched the company?
I was 43.
Okay.
43.
So
Yeah.
it's to my point earlier, mid-career.
Yeah.
Yeah. And so sometimes, entrepreneurship finds itself for people who weren't, planning necessarily to be an entrepreneur. And it's, it's not when you're 25, not all companies get started when you're 20 something.
Yep.
So you built that and that was successful, but then eventually you decided to go JP Morgan. So tell us about that process and why you decided to do that.
Sure. And so, look, Rich, I think it's also important to acknowledge that while there were elements of it that were successful, there were elements that were super hard.
Sure.
And businesses very rarely are a straight line up, right? Like there's ups and downs, and my business had ups and downs. That was part of my journey. And I got to a certain point where it was clear to me that there was a major opportunity. But it was also clear to me that to have the impact that I wanted to have, that I needed a lot more heft, a lot more infrastructure, a lot more support to get to where I ultimately wanted to be. And so that was a really important lesson for me, which is to be brutally honest with myself as to the right direction to go with my professional career. And in my case, it was clear that to have the impact that I want to have, being within a bulge bracket shop that had significant balance sheet, had terrific research, a much better brand name than Royal Capital, although I do like the name. All those things matter. And so I had discussions with what I thought were the top brands, potential partners: Goldman Sachs, Morgan Stanley, Bank of America, and JP Morgan. And coming out of that, it was clear to me that, and so my vision was, there's an untapped part of the market that has not been focused upon. They spend trillions. They need the same services as other banks, probably as other clients, but no one has been intentional about going after this universe. So if we leverage the connectivity that we had developed and I had developed in this space with the right capital behind me, the impact that we could have would be absolutely incredible. And so I also found, when I had the discussion with JP Morgan, they immediately saw the business opportunity, which was an important lesson, which was the other banks liked the idea. They thought it was a nice thing to do, but they didn't see the business behind it. Whereas JP saw that this is a viable business opportunity. And so as a result, I chose JP Morgan. I've now been at the bank nearly 2 years. And in that 2-year period, we've gone from me joining as a managing director to literally in the last week, the executive committee gave me the authority to hire a team of 9 people nationwide that would work alongside me to build this out.
So that's a great story. I want to come back to something though, because although you have, Columbia is a great business school, of course, and you have all that experience plus the graduate work, etc. Your decision really came down to your personal passion rather than just simply a business strategy, or certainly not for profit or for ego, right? In other words, you were passionate about this area, and what you saw, if I understand what you said correctly, you saw that the best way to impact that area was to do it through a bigger name with a big balance sheet, as you mentioned, and that you could have greater impact in a role at JP Morgan rather than on your own. Is that fair to say?
Yes. Yeah. That's absolutely correct. And so to kind of further unpack that, I do think finding something professionally that you're passionate about, that's your true north, that you want to be a part of because it's something that you personally care about, matters so much. And like I can honestly say that, look, I work super hard, but I'm excited every day because I know the impact that I could have on my clients. I knew that 25 years ago. Oh, and by the way, Richard, I should tell you, my wife read the bio and she reminded me that I have more than 25 years of capital markets experience, not 20.
Oh, well.
Of course, she would call me out. But this point to all entrepreneurs, not being so much rooted by the economic gain, but coming out with something that ultimately you're passionate about and can help solve. And if you start there as your true north, the other things will follow.
So yeah, I sort of want to build on that because I've seen that so many times. As an angel investor, I see a lot of entrepreneurs, and the ones who are there to make money, they're rarely successful. It's the ones who have passion to change either an industry or particularly, provide a specific service that doesn't exist. They're passionate about it, and that helps keep them pursuing. So that's your case. But the other thing is, I think it's your wife calling you out is an important aspect, that successful entrepreneurs surround themselves with people who tell them the truth and are not yes people, right? Because as an entrepreneur, your ego will not, you need to get to the best or right answer, right? And maybe there isn't a right answer, but you need to have the truth and what's going on around you, because if you don't have that, you're more likely to fail. And that's important in any career, but especially as an entrepreneur, because the market will correct your ego issues, because if you're not providing the best service or the right service for a particular market, you're not going to succeed.
Yeah. No, look, I think that's absolutely right.
So let's drill down a little bit though on you as an entrepreneur, because although you're a successful, I'm sure there's some parallels here in your career in the corporate world, but tell us a little bit about say the first couple of years, right? Because usually the first 1 to 3 years and sometimes longer is very difficult, as you're all of a sudden you realize there's a lot more things you're responsible for than maybe you realized. You knew you were responsible for everything, but there's a lot more detail and stuff going on that when you worked for someone else was sort of handled in the background or in the back office or by other mechanisms. So tell us a little bit about the beginning of the Royal Capital.
Sure. Yeah. So I would say, so the day that we launched, April 15th, tax day, 2013, I think the market was down like 400 points. And I just looked at my partner and said, are we sure that this is the right time to launch this bank? And then we kind of both agreed that maybe it was crazy, but we thought it was the right thing. And so, I would say the first year for us was solely focused on, while we're still trying to execute, it was around business development. It was getting the Royal Capital story out. It was being on planes, meeting as many people as we could, looking for opportunities, and so coming out of that, a lot of lessons learned. The first is we were so excited to have clients that we didn't we thought more about quantity of clients versus the quality. And we were just happy that there was an opportunity for us to raise capital.
Sure.
Now the fact that was, and then the fact that that was a $400 million opportunity was even better. But then once we got into the assignment and realized raising $400 million for a company whose business is based on a deal in Ghana is not the easiest project to take on. So that was one of the first lessons learned, which was to really be more discerning in terms of the number of clients that we took on, because you want to focus on, in this business, the highest likelihood of execution, of actually getting a deal done. So if you have several deals, but some of those stand a less chance of getting done, but you're committing time and resources to them, then you're probably not making as efficient use of your time. So that was one key lesson. We did early on have some good success, and we were fortunate enough to have a good relationship with a Fortune 50 telecom company that wanted to invest with diverse managers. And we raised $50 million for two diverse managers, which had not been a part of the market that we focus on. We solely focus on operating businesses, whereas there was a private equity fund and then a hedge fund that saw opportunities with corporate CIOs that wanted to invest with diverse managers as opposed to operating businesses. So second lesson learned was to be flexible enough in your business model to see where the opportunities are and then to adjust accordingly. So not being rigid. And then the third lesson, which quite frankly is one of the biggest lessons learned, which I want to impart to everyone, is we didn't have sufficient capital to ride out the storm. And whatever model that you put together, whatever projections that you put together, discount the revenue by a half to a third, and the time to close will be double the amount. It's kind of like doing renovations on a house. It's going to cost you more and it's going to take longer. It's the exact same thing with the business. And so because of that, we didn't have sufficient capital during certain periods to make the investment in infrastructure that we needed, and so that was a real challenge, so in year one and part of year two, trips from New York to the West Coast happen every 2 months. Well, a year and a half later, we decided those were better served by conference call as opposed to face, as hopping on planes. So key takeaway is ensuring that you have the proper capital base to not only launch the business, but see it through the inevitable downturns.
So let me just ask a couple more questions, but I want to encourage people who are listening to start to type some questions in the Q&A box so we can have those queued up. So one question is, who inspired you along the way?
So I would say my passion for business came from my father, who's very curious. He probably read more books in any given year than I'm embarrassed to say that I've read in any given decade. But I remember him reading the 60-second or the Minute Manager written by Ken Blanchard in 1982. He was that kind of professional. So that he probably really helped create my interest in business, or stimulated my interest in business. And the entrepreneurial journey that I chose to take on, without a doubt, my boss, the CEO who ran this firm, Blaylock and Company, was who I learned from. And that was such a pivotal part of my entrepreneurial journey, because he was another African-American man from Winston-Salem, North Carolina. Didn't necessarily fit in the same cookie cutter mold of the average investment banker at Merrill Lynch or DLJ or Morgan Stanley. But his emotional EQ was far greater than any other CEO executive that I had ever spent time with. So a lot about how I have developed relationships at this more senior part of my career, which is different than how you're approaching things as an associate when you're just developing and executing. But when you're in the front lines having to actually generate business, the ability to connect with a CEO and see them not just, not just as the CEO of a $5 billion company, but to be comfortable that they're a human being just like you are, and learning how to approach them and understanding everyone has the same problems, and they're human. And so that approach to cultivating, developing relationships, listening to people as individuals as opposed to thinking of them as the CEO, was incredibly helpful as I decided to move towards this entrepreneurial career. And then lastly, in that environment, learning how to persevere, how to hustle, how to connect dots, how to use grit to ultimately persevere. Those are all elements that you need to have in that kind of environment, that now at JP Morgan, quite frankly, I don't see the same at any of the investment banks in terms of the common persona of the people that I work with. And, a prime example will be, I'll have a meeting with the CEO. It'll go exceptionally well. And they're, I think, ready to become a client next week. And then my colleagues may say, great, let's set up a meeting in 2 months. So that lack of sense of urgency that every entrepreneur has to execute. And so when you could take that kind of entrepreneurial mindset, and then you come back into a large institution, it gives you a leg up, because effectively you're now a entrepreneur,
right?
Which is, so.
So a couple more questions, and we'll open up the Q&A. So tell us about your experience as an African-American on Wall Street.
Thank you for asking me the question, because it's an important one. So I would say overall, it is astonishing to me that 25 years later, so most of my career I worked on trading floors. Merrill Lynch, there were 500 people on the floor. Maybe there were 5 people of color. And unfortunately, 25 years later, the numbers have not changed that much, which is really unfortunate. And it's the common theme where it's a triangle, and you have a great base of analysts and then some associates, but by the time they reach the mid-level, there is a lack of mid-level diverse professionals. It was present then, and it's present now. A key part of that is lack of mentorship. I had guys that were in the same groups as me, that went to the same prep school as the MD, got asked to go out to lunch, got to go on the best pitches, and just continued to progress because they had something in common. And so I saw that firsthand. I saw that firsthand. Now, it's different being at this stage of the career where I can make a difference. And so I obviously, so I lead this national business focus on supporting diverse entrepreneurs, providing capital, but I'm very focused on being a mentor, meeting with students or professionals earlier in their career, helping them navigate, bringing them to meetings that they wouldn't otherwise have the opportunity to attend. And I have a duty. I have a duty to be there for the next generation. And, I think when I was just coming out of my career, in many cases, that was the first decade of MDs that were Black, that were on Wall Street, that had these powerful jobs. And not to say that there weren't some that were looking back to help others, the majority of them were not. So that being said, there were a couple that were there for me. One of which was a very senior investment banker at Citigroup, has gone on to continue to do incredible things. And having someone like that to bounce ideas off of, help me navigate through, think through what's the right way to approach a situation, was incredibly valuable. So again, I have a duty at this stage to help the younger generation of diverse professionals.
So last question sort of tied to that theme. Of course, over the past year, there's been a significant focus on diversity. Mm-hmm. And I think a number of us are trying to help and trying to navigate this, but some of this is not clear on the best way to help. So what advice would you give to non-diverse populations that could help with this issue? Mm-hmm.
I think, Richard, that is probably the most important question that we've covered. And I can't thank you enough for asking it. The last year for every African-American has been incredibly difficult. To focus on a high-pressure job at a global investment bank as a Black male, with all the social unrest that has happened daily, monthly, last several years or last several decades, it's a lot. It's a lot. However, I think because of the internet, because of us being from home and people seeing everything on Facebook, I think it's really opened up the eyes to a lot of non-diverse people that racism still exists. And, in the days and weeks after George Floyd's murder, the number of my colleagues that just reached out and wanted to know that they were there for me and wanted to engage in a frank conversation about what could they do was unlike anything I've seen in my entire career. So to the question, what can non-diverse colleagues do? They can start by just, one, having an honest assessment of where are they in their journey in terms of really being truly open. That's number one. And perhaps some acknowledgement that they can do better, that we can all do better. So I think that's number one. I think number two is when they're in the, there are conversations, there are things that happen when non-diverse professionals are in the room that others feel more comfortable saying things. And it's not okay just to be in the room to hear something and not say something, because the ramifications of that are far greater than that moment. It impacts the professional development of the employees that that person works for, their ability to get the next promotion, because if they're saying things like that, that's certainly coming through in how they treat their employees. It's impacting that diverse employee's ability to provide for their family. And it just continues to escalate from there. So when in situations that comments are said, doing something about it, whether it's addressing it directly in that room or going to the human resources partner and putting it on record so that it's addressed, very important that things are said. And then, I think finally, it comes back to just starting every day, just thinking through the person that you sit next to as just being a person, not Black, not white, not Latinx, just a person. And if we approach our day and conduct ourselves with that mindset, I think we'll be well off better because of it.
So thank you for that. It's my perception, at least, that we're all going to have more courage to be open, vulnerable, and have uncomfortable conversations that are going to, it's the only way things are going to change. We all have to engage and have some empathy, but mostly really do things that affect change. So thanks for that. Thanks for your time. Now I'd like to shift to questions, and Matt Hansen, who runs our New Ventures group, is going to jump in here with some questions, and we'll sort of go from there. So Matt, could you go ahead and ask the first question?
Sure. Thank you, Fred, for your role in mentoring young people in your industry. Question is along the lines of informing that mentorship. So throughout your career, you spent time in Europe, you spent time in different industries, you spent time with IPOs as well as private equity. Are there certain countries, companies, or industries that do better at providing access to capital for diverse founders than others? And what have you learned from that variety of experience?
Very interesting question. I wish I had a better answer for you, which is I have not seen any particular industry that has been more receptive to providing access to capital. And it comes back to the networks that provide capital, and they're more comfortable, regardless of the type of business, providing capital to people that look like them, that went to the same schools, that go to the same golf clubs. So I wish I had a better answer for you. I do think because of the events of the last year, that's starting to turn. You're seeing more women receive access to capital. You're seeing more Black founders receive access to capital. And I think that trend is going to continue. So that is the silver lining in what has taken place over the last 9 months, which is we are finally becoming more open to the democratization of capital. And that is exciting. JP Morgan, we're providing $30 billion of capital over the next 5 years to close the racial gap. SoftBank just created a $100 million fund focused on diverse founders. PayPal similarly just created a fund focused on diverse founders. You know, these are all things that have happened over the last 6 to 9 months. So things are starting to turn. And do think, particularly in fast-growing industries, that where there's the big idea, because of this sea change that's taking place, perhaps that represents the biggest opportunity.
Thanks, Fred. Matt, what's the next question?
Is there any one particular variable you may see that leads more frequently to success in accessing capital to small business?
One variable. And Richard, this gets back to a conversation that you and I had. I'm going to give you two, because it's not just one. And the second is the one which early in my career I didn't fully appreciate. Like there is, and so the first one, there is no substitute for hard work. That is far and away the most important thing. That it's not necessarily the smartest guy or woman, but the person who worked hardest to address their clients' goals. So that's number one. And the intersection of all that hard work with luck and timing. And that's the one that people early in their careers don't fully appreciate. When I was finishing up at Columbia Business School, I interviewed with one of the top banks, and they said, which would you rather have? Brains or luck? Or smarts or luck? And I said, with smarts, I can make my own luck, which is a very Ivy League business school student thing to say. But now, 2 decades plus later, I've seen firsthand that it takes more than hard work. It takes more than intellect. Luck and timing also accounts for that. And in my current role, I'm also very cognizant of the fact that while I launched this business before George Floyd, after George Floyd, there became an incredible focus around diversity. So I'm very appreciative of the experience, the ability to have an impact, but I'm also cognizant that I was in the right seat at the right time, best positioned to capitalize on this opportunity. And I just think we all need to be really humble about our career and things that develop, and just be very aware that it's the confluence of all these things that come into play. And that variable of luck and timing, which more often than not has more to do with how the ultimate success than you would expect, particularly earlier in one's career.
Yeah, here. I agree with that. And most of the uber successful people I know are very humble, because they know there's a lot of pieces that have to come together, whether you call it luck or timing or whatever. Although I do believe the harder you work, the luckier you get. but yeah, it's a whole bunch of things. And I think, your sense of responsibility is going to be a big factor in changing this vector that we're experiencing with racial issues, at least in your industry and your market. So that's so important. So Matt, let's go to another question here. Maybe time for a couple more.
Sure. You outlined some of the setbacks you had in your career, from not being selected initially for Merrill Lynch, and then the challenges with the layoff, and then the challenges with Royal Capital. How has that really equipped you to deal with whatever the next challenge is? That is, what do you see as the next hill to climb to address in terms of this access to capital, based upon what you learned from those setbacks?
So there's actually a few questions in that in that question. So drilling down on the access to capital piece, this continues to be the biggest challenge to women in diverse businesses. Last year, less than 3% of venture capital went to women-owned businesses. 3x. Diverse businesses are 3 times likely not to have proper access to capital. These are stats from 2019. It continues, and anecdotally on a weekly basis, I speak with diverse businesses that still have this issue. So in addressing it, that's part of the reason I'm at JP Morgan, is that I'm actually in a seat, in a role, running a business where we can provide capital, where I can be in the room and have the conversation and advocate for diverse business or for a woman-owned business. It's not it's not 9 white males that are making that decision. And that is a tremendous shift that's occurring. It's these new diverse funds that are being created and launched that are going to have capital that they can put into these diverse communities. It is, corporate America stepping up. It's Microsoft saying, we want to double the number of Black and Latinx companies that we have as suppliers over the next 3 to 5 years. JP Morgan is doing the same thing. So, it starts with what I can do and the impact that I can have. But I do feel like this is a tipping point, and that across corporate America and now institutional capital has awoke to the idea that there is a lack of access to capital and we have to change it. And that's what we're trying to do in our way with this $30 billion commitment at JP Morgan. It's what SoftBank is trying to do. So, this groundswell of corporations that are stepping up, it's Goldman Sachs. Goldman Sachs is committing $10 billion over the next decade to support Black women-owned entrepreneurs. So to me, those are the encouraging steps that are taking place that give me hope that we are headed in the right direction. But make no mistake, there's still a lot of hard work to be done.
So I agree with that. We are at a tipping point, but there is a lot of hard work. We have to keep persevering these discussions and looking at how we've made decisions that have been biased in the past and how we can change that. So Fred, I really appreciate your time today. This was a great discussion. I appreciate you talking about your corporate career, your entrepreneurial career, and some of these diversity issues that we have to address. So thank you very much for your time today. I also want to thank UPS for being our sponsor for this series. Thank you for supporting diversity, both at UPS and in the entrepreneurial ecosystem and here at Beal Applied Innovation. So everyone, thank you again for joining us today. And we'll see you soon. Thanks.
Excellent. Thank you so much, Richard. Okay, bye-bye.